Hi, my name is Thaddeus Campbell, and I'm here at the headquarters of Legacy Developers. We are builders of Class A self-storage facilities around the United States. We will go anywhere in the continental United States where the development opportunity meets our underwriting criteria. And I'm so happy today to be joining you to talk about the best asset class in commercial real estate. Right? This is not a new phenomenon. Those people that understand self-storage know that this has been a long track record since self-storage started being tracked as an asset class back in the late 70s, early 80s. It has outperformed not only every asset within commercial real estate, but every asset class period for a 40-year time period. Now, over the last couple of years, as we've seen massive turmoil in various markets, whether it be crypto or the stock market, the housing market, based on what happened with the pandemic, self-storage has been a shining star. Tracked since March 15th of 2020, when the world shut down for COVID, the returns in the self-storage space tracked through October of 2022 have come back at a staggering 61.5%. That statistic brought to you by NAREIT, organization that conglomerates information from all of the various real estate investment trusts across various platforms of real estate. The next closest commercial real estate was the industrial space. They were less than 30% return. To give you a little idea, as you might suspect, as you probably are smart enough to suspect, with the exodus of people from their workplace to working from home, commercial office space took a massive hit. In fact, saw a 31% loss in that same time period that self-storage was able to really see massive growth, not only in revenue, but the amount of self-storage that's being opened around the country. In 2022, the total available square footage of self-storage grew to more than 1.6 billion square feet in the United States. Now that represents, with almost 400 million people, almost 4 square feet per person in the continental United States, actually in the whole United States, Alaska and Hawaii as well. There's almost 4 square feet per person, actually a little over, for every single person in the United States. And that is not unusual because, in fact, the demand for self-storage is even higher than that, which is one of the reasons that over the past 5 years, we've seen a massive increase in development. In fact, over 15% of the total storage that exists in the United States has been built in just the last 5 years. 255 million square feet of self-storage. You may know yourself as you're driving around your community, you may have noticed that what we used to see 20 years ago, the single story on a side road, drive up door self-storage, now you're seeing 3, 4, 5-story facilities with big signs. They look like modern commercial buildings, and they're self-storage. The reason that growth has happened is because of incredible growth in both demand for self-storage and also the rates that self-storage facilities are generating. In 2020, when COVID happened, there was some immediate panic in the self-storage industry on March 15th when the whole world shut down. What was going to happen to the industry? Because one of the biggest drivers for self-storage is when people move. Well, nobody was allowed to move. So what was going to happen in the self-storage industry, and what we found out very quickly within a couple of months, is that as people were moving out of their offices and into their homes, and they needed to create the space to work from home, there became an incredible demand for self-storage that drove rental rates for self-storage to the highest they've ever been, and at the same time also pushed occupancy rates to the highest they've ever been. So 2021 through the end of 2022 were the best years that the self-storage space has ever seen. And we expect that to continue going into 2023, despite some of the economic turmoil that's coming from the Federal Reserve raising interest rates, bank money becoming a little harder to come by. There's been a tightening in the economy for sure. A lot of those investors that are pulling back from certain asset classes are actually looking to get into self-storage And one of the reasons is the COVID disruption is not the first time that self-storage has been an absolute winner during economic turmoil. If you go back to 2008 and the housing crisis, one of the worst recessions we've ever seen in our country, self-storage was a star. In fact, while there were short-term losses over the course of months in 2008 for the self-storage industry, over the course of the full year, there was a 3% revenue growth in the space. So it came through the 2008 recession unlike almost any other asset class. And of course, out of 2008, money again got hard to come by, and we saw a little bit of restriction of new development in self-storage. But as the asset class did so well financially out of that recession, what we saw over the next 10, 15 years was this incredible growth in building self-storage. And we have yet to see a peak. In fact, back in 2006, companies that manage the big REITs, the Public Storage and Extra Space and CubeSmart and Life Storage, those are the biggest operators of they do third-party management in the self-storage space. They would be excited to have 85 to 90% occupancy in one of their facilities. Right now in 2023, even though there is way more facilities around the country, in fact, there's been 255 million square feet of self-storage developed just in the last 5 years. That brings the total to 1.6 billion square feet. Even though we've seen this massive explosion in self-storage development over the last 5 years, the fact is occupancy rates now are running in the mid-90s. Right? We have not seen us reach the peak of what the public is demanding. And at the same time, while naturally you would think supply goes up, rates are going to come down, the exact opposite has happened. Not only have we seen increased supply lead to increased occupancy, we've also seen increased rates. And one of the reasons we've seen that is the type of self-storage development that we're bringing online as all self-storage developers, as an industry. We're bringing what's typically referred to in self-storage as phase 5 type facilities, where you're seeing 3-story, 4-story, 5-story facilities with beautiful commercial building facades. You see the windows where you can see through to the roll-up doors. You're seeing a very high class of facility, and what that has allowed is a new class of consumer to come in and start utilizing self-storage, where people are using self-storage for their businesses, whether it's an eBay business, somebody selling stuff out of their home, contractors, plumbers, electricians, people that are doing work around their community and need a place to store their stuff, and moms, housewives, single women that didn't used to feel comfortable renting self-storage on a back road with gravel driveways with no security. Now you're talking about this beautiful, well-lit, there's security cameras everywhere. It has really opened up the number of people that are coming and utilizing self-storage. So we have this perfect storm right now where COVID was very worrying for the self-storage industry. When the pandemic first hit on March 15th, nobody really knew how it was going to play out. But what happened very quickly is self-storage was deemed a necessary industry, right? It was put on that list of things where we were allowed to open our stores, employees were allowed to go into the stores. Yes, there were restrictions, you had to wear masks and had to follow the protocols, but we were allowed to open. Why? Because paramedics store their equipment there, pharmaceutical companies store their stuff there, and people needed access to these critical things. So self-storage saw a very fast recovery, and as people moved out of their office space and into their homes and had to clear space for their to have a workspace in their house, they would take the belongings of that office room and put them into self-storage. So we've really seen an increase in occupancy rates and an increase in rental rates over the last couple of years since self-storage. That's why we've seen as an industry a 61% return since March 15th of 2020. That number tracked through October of 2022 by any REIT. They are an organization, a nonprofit in Washington that tracks numbers for all of the commercial real estate industry. Self-storage has outpaced its closest competitor in real estate by double. Industrial warehouse has shown a 30% increase in revenue over that time. self-storage at 61.5%, really blown the field away. To give you guys some frame of reference, if you're an investor and you're used to being in different commercial real estate spaces, multifamily, which has always been a fantastic investment, has returned 4.5%, while self-storage has returned 61.5%. And God forbid you were in office space over that couple of year period. Office space, of course, got decimated by what happened in the pandemic. Their returns are down 31% in the same time period. So makes us very excited, and why we're so excited to be in self-storage. For those of you who are investors also, maybe you've invested in single family residential. One of the reasons we really love the self-storage space, and the primary difference between residential and commercial, is that residential pricing is based on comparisons, right? You look at a home and then you go look at 5 to 10 homes in a nearby area that are comparable in square footage, number of bedrooms, number of bathrooms, do they have a pool, do they have a basement, and you set a price based on how those other homes sold. Commercial real estate, completely different. It is 100% reliant on the income that's being generated from that facility, the net operating income. How much money is left after you collected all your rent and you paid all your bills. And so when you go to refinance and look to make, or sell and look to make a profit off of that facility, you are not beholden to what happened to the person next door in order to determine your price. A buyer of the property doesn't get to come in and say, hey, I don't think this is worth that amount of money. I'm only willing to pay this amount of money. The cash flow of the property sets the value, and the bank is going to come in and give you a loan purely based on your cash flow, which is such an amazing part of why commercial real estate is a great investment. So excited to be here. You know, self-storage versus other commercial real estate assets. I've run down how much better it did during COVID. That track record is not just for the period of COVID, but goes all the way back to the early 80s, late 70s, when self-storage first started to be recognized as a commercial asset class. So if this kind of stuff is important for you, you're looking to find investments that work for you, or maybe you're a developer looking for projects to do, you know, we invite you to dig in. You can follow the link here on your screen and get information about us legacy developers and the network that we're creating with our mastermind, the Storage Syndicate. We've been able to partner with 3 other young developers looking to get into the self-storage space, where we're able to help them get into a $20 million plus self-storage development project. And if that's something that's of interest to you, I encourage you, follow the link, you know, get some information. I'm happy to hop on a phone call with you and go through a game plan with you to talk about how we might be able to help your business. Again, I'm Thaddeus Campbell. We're legacy developers, and I look forward to talking to you guys more.